We believe that wealth is a journey, and that this is your jumpstart to trading success. Hello, everyone, and welcome to another edition of the Trader's Mindchat show, where we believe that wealth is a journey and that this is your jumpstart to trading success. I'm Mike.
And I'm Melissa. And if you ever wanted to know how to navigate challenging markets, today is the show for you. We have on Rizwan Memon, who has such an incredible bio for such a young man. Like, it's just unbelievable what he's been able to accomplish already, where he has operated multiple businesses starting from a very young age, and is also the founder and president of Riz International. He currently spends most of his time managing a seven-figure investment portfolio, his private investment fund, and mentoring new traders.
Riz was on the show last year. A little over a year ago. Can't wait to talk to him again.
Oh, it's going to be great. But before we jump into that interview, we just got back from Disney World, which was so much fun. It was just incredible that we were able to finally go after the crazes that we've all gone through with this past year with COVID, and being able to finally have that time and bring our daughter Lily. It was her first time there. And so, what an incredible experience. I think Mike was the most excited out of all of us. Because, what was it, 30 years since we had been to Magic Kingdom?
It was great. That ice cream soda. From Tomorrowland. It's the little things.
The little things. Absolutely. But wanted to kind of share how Mike was able to take a week off from trading, where you basically were like away from the markets for that length of time, right?
I learned my lesson from the honeymoon. For anybody that hasn't heard that story yet, so right before we're getting married, I'm in this silver trade. Go back and look at a chart of silver back in 2011, and you'll see that it was in this parabolic move. So I was in, maybe in February or March, I forget the exact date, but it makes this move 70-80% run in a couple of months, and I'm like, all right, this is gonna pay for the entire trip. So we get married, fly out that Monday, and I had forgotten to set a stop loss. And when I come back, I wasn't at an 80% gain anymore. I was at about an 8% gain, and learned the hard way that you should double check and triple check your trades and your trading plans and anything that you have set up that you're going to leave open before you go on vacation. So fast forward to present day, what I did this time around was I took a look at the current market. I took a look at my current positions. I saw that the market was in a precarious, choppy zone, and the positions that I had, they were profitable, but many of the stocks that had broken out over the past couple of months have run up very quickly and then dropped just as quickly within the span of a week or two. So I was like, you know what? Let me just sell those positions because they already had some significant gains, and not have to worry about anything. Right? Preserve not just the physical capital, but also the mental capital. When you're away, you don't want to have to be thinking about markets. It's an infinite stream of opportunity. Just come back fresh, and you'll be able to see everything with a fresh set of eyes. So that's what I did. And
yeah, I'm glad you did, because you hear stories of traders when they are on vacation and they do have a loss, or they have, like, they're constantly checking into, especially a choppy market like this, where they're not able to then be in the present to be able to enjoy that moment with their friends or their family. So I think that that's so great, that advice that you have, that, as much as you did suffer a loss when we had our honeymoon, hopefully that was the only loss from that.
Failure is the best way to learn if we take the lesson. Right, and so that's why, I had so many failures over the years. I still, I'm not perfect today. Well, you're never perfect. It's continuously learning, right? It was Socrates that said that all that I know is that I know nothing. So I am the wisest man who ever lived, and it's not that he knows nothing and he's a moron on the street. It's that as a student, right? Socrates was a fantastic student, continuously learning. The more that you learn, the more that your mind expands, and you become just aware of how much more there is to learn and how much more that have yet to know. So
I think that leads to the Socratic method, which is of asking questions and continuing to question things and questioning. Maybe you had been doing something so far, but then there is a life change, or like you say, you do go on vacation. So the way you had been trading prior to that point may not work in this next phase. So I think that it is important to continue to ask questions and look to other people to help you find those answers.
yeah, definitely. The market is continuously changing, right? Like not that it what worked in the past, like chart patterns or whatever, like won't work in the future. No, that's not what I'm talking about. Like that's a separate topic. Human psychology basically doesn't change over the longer term, but uh, what I do mean though is that markets move in cycles. So what worked in 2020 is going to be different than what's going to work in 2021. The patterns are different. The stage of the market is different. We started in a early stage bull market last year. Now and it ran 70-80% for the major indexes. That's a lot for even a stock to move in a year. So we're in a different type of environment now. So the types of trades that worked last year are not going to be the same types of trades that work this year.
That's a great segue. So now that you're back in the market after our vacation, you're back in. It is a bit of a choppy market. So how do you plan for that? And what type of advice do you have for our viewers about how to plan for this type of market
Yeah,
environment?
yeah, great question, and I'll also tie it back to the Socratic method, continuing to ask questions and ask questions of yourself. So after that summit, well, with Jason and Mike Bellafiore, the Trader Vault summit, my trading evolved like even from that,
Oh,
right?
we learned
Like
so much
learning
from
like
that. It was great.
yeah. So some of the lessons that I learned from both Mike Bellafiore and I've heard Austin Silver talk about this too. The whole like grading your trades concept, and I've been grading my trades for a long time, just numerically, right? Like using the our tool, the Trade Gauntlet, which by the way, like this week, we spoke to the lawyer and we're getting ready to patent. I can't believe that we have software that we are patenting, but but
So
anyway,
many exciting things. This is crazy.
lots of exciting things going on. But it made me think about a simpler way to grade trades and to come up with what constitutes an A trade, what constitutes a B trade, what constitutes a C trade, and to come up with strict criteria for each one of those buckets, right? So you could point to a trade and say that, okay, this is an A trade, here's why. Here's a B trade, and it should look like a bell curve, and it ends up looking that way. So I'll look at that, and I'll also look at the current market environment, and this is something that I got from our newest coach, Stuart Chalmers, who's a brilliant guy. So he has his own criteria for gauging market health, and he will call a market either a green condition, amber, or red. So I've adopted a similar approach, but I'm using red, yellow, and green. Basically, what it's doing is helping me figure out like if the market is moving and everything is working, right? Like so the indexes are trending higher. I'm finding a lot of A and B type setups, and everything is moving in my direction, and the current trades that I'm putting on have been working, then that's a green condition. Then that it's like, it's a nice sunny day. The pavement is dry and it's straight. So go ahead and floor it if you're in that sports car. Versus a yellow condition, or what we're in now, a red condition, where the market is very choppy. There's not too many there's actually nothing that I would consider an A setup, just like some B and C setups. So that's like, okay, it's raining outside, the roads are slick, they're kind of curvy. You wouldn't floor it in that kind of a condition, so you reel things back. So, what's all this lead up to? It leads up to a very simple formula. It's the trade grade times the market condition, and that's going to give me the amount of risk that I should put on any one trade.
Oh, it's great. I love this. And the way when you're telling me this, it reminded me of this game I actually played with my daughter Lily, where our daughter Lily.
Yeah, right.
But yes, but it's
Something you didn't tell me.
it's basically red light, green light, and yellow light. So exactly when it's a green light, she just keeps going and she just runs and runs and runs. And as soon as I scream red light, she has to stop. And then when it's yellow light, she goes slow, very cautious. And that's kind of is what you were talking about, is that sometimes you need to pull back. You need to just stop and not even enter the market if you don't find something that is up to your standards or something that that you believe in based on your criteria. So it really kind of tells you just like you need to take that moment, step back, and maybe wonder should you even enter the market at this time.
Yeah, and having a simple, clear way to define what market type it is, well, what trade grade you have, that's powerful stuff. And thinking back on the different books that I've read, like I that's something that I've kind of pieced together, like for the criteria, but I don't recall reading that statement anywhere.
So where are you grading this? Is it in like an Excel file, or where are you doing this type of grading?
Yeah, great question. So the first part of the grade is my actual gut feel for the trade. I think that that's something that's very important, and it's not emotion; it's our experience that's talking to the trade. So I'll pull up some charts, for example. Like the first thing that I do is I pull up charts and I go through our universe watch list, a couple of hundred stocks that I'm interested in that have passed my criteria. So
Mm-hmm.
I'm scrolling through this list, and different ideas will pop out at me based on the chart pattern, patterns that I've seen several thousand times and have more often than not yield positive results. Oh, great! So I see that pattern, throw it on to a list, to a trade ideas list. Some of these patterns that I'll see will make me feel like yeah, like it's pretty good. But there's other ones I'm just like, oh yeah, that's a gimme. Those ones are like I would give it like a score of a 5, right? Like 5 out of 5. Then if the trade grade, like, so if my gut feel for that trade is a 5, then it's qualified to potentially be an A level trade. Then there's another step, figuring out if this trade is going to be an A or a B.
I'm going to cut you off here because
Yeah.
what I would love to hear from you viewers is that I think this should be like a boot camp. Like I think that a visual to being able to see how you are grading these type of trades, I think that that would be such a great boot camp where everybody can kind of see how you're doing it in real time. What do you think? If you
Yeah.
guys like that idea, comment below. I'm giving Mike more work.
Yeah, thanks a lot. I'm trying to get work off my plate. Now we got no. I love this kind of stuff. Yeah, we should totally do something like that.
No, I
If
think
people
it's
are
going to
interested,
be
I'd love to do it.
yeah, it's so beneficial to actually see it in that simple way. Like I said, people talk about, but you don't actually see how you can apply that for your own trade.
Right. So your gut feel for something is important. And you want to be able to cultivate that because over time, right? So you're going to be a better trader than you are today, 6 months from now, a year from now, provided that you stick with it and you're continuously trying to self improve. So you want to develop your gut, your intuition, your subconscious
But
for
we
these
have our
ideas.
female intuition, so
Right. That too. I work on my female intuition all the time.
Oh, I'm sure. I'm
So
sure.
so that's one part of it, but I don't want to just solely rely on gut. Then I'm going to run the idea through the gauntlet, make
Hmm.
sure that it passes everything, and like it's uh, only certain trades that I would want to qualify to run the gauntlet. It would be a lot like it. Not everyone gets to compete in the Olympics. Right? There's qualifiers for athletes to compete in the Olympics. That's what we want to do with our trades. So I've gone through my list. I found the potential candidates. The few of them qualified as potential Olympians. So it's great. Now you get to run the gauntlet. So
And this is getting a little technical because I know a lot of you may not know what the Trade Gauntlet is, but comment below and go check it out on marawealth.com. These are great tools that we have available for you to be able to improve your trades. And we also have a video on how to use the Trade Gauntlet, and that's like what he was talking about, figuring out which are those contenders that pass that particular criteria, and it gives some sort of output at the end to make you feel more confident about your trades.
yeah, right. So at the end, it gives you a score.
Yeah.
And so if it gets a high score, then all right, now it's something else that qualifies it as a potential A level candidate. Then there's another part of it, which is how close are we to earnings? Because earnings are a period where it's known that you're going to have increased volatility for any stock that you're trading. So if earnings is more than 2 weeks away, then I count that as something that's positive for this setup that I'm looking to get into right now. Versus if earnings is a week away, then I would put it lower on the rank. Still an interesting idea, but I go into the trade understanding that this is going to be pretty short term unless if the stock takes off. So it's just the main idea is to have a set of criteria for by which you'll label something an A, label something a B, label something a C, and then attached to each one of those letter grades is how much you're going to risk.
And this is all great information. Like I said, if you want more information about this, definitely check out marawealth.com and leave a comment below. We'd love to go into more detail. I will share if you guys do want this type of boot camp about how to grade your trades. We'll love to put that together for you, or I'll have him put together for you. Yes. But stay tuned. We have Rizwan Memon joining us in just a moment after this word from our sponsor to talk about how he navigates these type of choppy markets. So stay tuned.
Today's episode is sponsored by the Mara Mindshift Guide, a trading beliefs workbook. Trading is a mental game. This workbook combines 20 years of trading experience with simple, easy to follow exercises to help you manage your mindset and move past limiting beliefs. Get your copy of the Mara Mindshift Guide today on Amazon or at marawealth.com/mindshift. All right, so our guest today, fantastic guy. We've had Riz on the show last year. We've had him on Instagram Live. Even before that, I've known Riz now. How long have we known each other? Like a couple of years. It's been.
Yep.
Rizwan Memon is super impressive. I don't know what else to say other than that. Like this guy's resume, he's still in his mid-20s and has already built a company. He's a president founder of Riz International, 7-figure trader, verified. Recently had a 10K to 25K challenge that he publicly posted to his Instagram feed, was able to run it up in the span of only 11 weeks to generate a return of over 150%. That freaking blows my mind, especially given the challenging trading environment that we've had. So I'm super thrilled to have Riz back on the show, and not only that, to be able to call him a friend. Riz, thank you for being with us today.
The pleasure is Mike, Melissa. It's great to be on. I know it's been a while. I mean, like you said, it's been probably a couple of years since we've known each other easily. In fact, now I've gotten old. I'm 29 now, right? Since probably the last webinar we did, like whether it was Zoom or whatnot, was probably a year ago. And in that time, a lot has changed, obviously, with COVID and lockdowns and the economy, and obviously a shift in market sentiments. And really, I think the whole structure of markets has shifted, before our eyes over the last, 12, 14 months. And it's fascinating. It's fascinating. I mean, I can't say it's all bad. I can't say it's all good. We got to take the good with the bad. And man, I'm just doing the best I can to do what I do, and keep going forward.
Riz, so yeah, I want to ask you that, like, so for the people that are joining us today that are meeting you for the first time, can you give us a brief, like, overview of how you got into this, and walk us through some of that?
Yeah, sure. So, to give you a brief synopsis, on who I am, so I'm 29 years old now, gonna be 30. I got a lot of gray hair on the side, probably, so yeah, 30 in July. And you know what? It's been a hell of a journey. I started probably around 16 or so, when I was 16. So it's been, I don't know how to explain it besides the fact that it's pretty much been almost half my life. It's been, pretty much my entire adult life, actually. And I just got interested because, I just seen my father, call up the broker. I didn't know it was a broker at that time. And this was back in late 90s. I was young. I just heard him talking on the phone, telling someone to do something. And I was like, well, this is, well, what do I have to do to be able to tell someone to do something? I was a kid, probably, 9. I didn't know what it was going on, but it's only when I, started, getting a little bit older, around 14, something like that, then I started realizing, wait, there's something called a stock market. And he's like, yeah, I was making a phone call for the broker. Obviously, things progressed, by the time I started, and back in 2008, electronic was trading was there, obviously, but it was nowhere, where things are now. In fact, for us here in Canada, I remember when I started, I mean, in my dad's time, it was like probably about $50 or something Canadian per trade, and you had to make a phone call, to do a trade. For me, in my time, I recall when I started, probably about $20 to $25 Canadian per trade. Right. So that's, I know it's a difference between the US and Canada in terms of access and whatnot, but over here now, our commission is, we still pay commission. We're pretty backwards here. We still pay commission, about, $7 or so per trade. So things have progressed not only in that, but many times, many ways. And it's been, pretty much my life. Been my life's work. It's been a passion, ever since that peak of curiosity. And wow, it hasn't been all good, but I always look at things as, we are here and we are in the now, and I'm grateful. I'm blessed.
Uh, that's an amazing mindset to have. Well, whenever I'm talking to traders, I try to instill that kind of mindset in them. How do you go about generating that for yourself on a consistent basis? Is
Sorry,
there a
what was that? I missed
routine
that
or?
question.
I'm sorry.
I missed that question. Sorry.
Yeah. How do you cultivate that kind of a mindset for yourself each day? Like, do you have a daily routine that you're going through to remind yourself to have this attitude of gratitude, or well, what's your process like?
Yeah, it's a great question. For me, I mean, it's not a secret. For me, it's been a lifetime of positives and challenges as well. Everyone has their challenges. For me, it's been a different set of challenges in terms of, coming here, to Canada, moving here from a very young age, having to go through significant amount of health problems, even now out of my control. You realize what we as human beings take for granted, what I even to this day take for granted. I'm hearing you, seeing you, these are all things that we take for granted. And for me, having to go through challenges that other people haven't had to go through has kind of shaped my mentality around how I see life, how I see what we as pretty much people who are very, very fortunate to be living where we are, whether it's North America, Europe, wherever. And we have a lot of liberties, a lot of things. So for me, gratitude is key. I don't have a process where I'll get up and, like, spend 5 minutes on practicing gratitude, or 10 minutes doing yoga. I don't have that kind of process. I know it works great for some people, and some people will swear by it. That's great. For me, every time I go through some kind of challenges, or every time, even when I'm, something good happened, whether it's a good trade or, I'm getting spend time with family, I always do my best to remind myself, okay, this could be the opposite. Many people don't have a family. Many people do not have the means to do the most basic things, whether it's, food or water. So that kind of, I would say, reframing of how you see what you have and how you see what you don't have. Some of the things I don't have is, you know, spectacular health. It's just unfortunate, but it is what it is. Someone else has that, but then someone else might look at me and be like, Riz, I wish I could be you. And I'm thinking in my head, I wish I could be you. Right. So that's the thing. It blows my mind how life is. I don't know. It's all connected, intertwined, markets, psychology, mindset, human beings. I could talk about this all day ad nauseum, but obviously we are on a time schedule. I'm told. So
Yeah, absolutely, and I totally agree. I totally agree. All right, then let's segue into that 10K to 25K challenge. Like, that's uh, that's mind blowing.
yes, yes. I mean, even for me,
Like, especially given this choppy market, like 2020, 150% in 11 weeks would still be massively impressive, right? But to do it when the market has just like kind of whipped everybody around, like, how'd you do it?
yep.
Walk us
Good
through.
question. So in fact, I did a challenge similar to this last year. So obviously, this challenge got completed maybe I think a month or so ago, because like you said, 11 weeks. But I did a similar one in 2020 as well. I think just around when COVID was starting, and that was I think 10K to 20K, and I did that in maybe 3 months or something like that. So this one I upped the ante. I was talking to my team, and they're like, Riz, we could do the same thing. I said, yeah, okay, 10 grand. I mean, if I lose it, if I blow it up, it's going to be embarrassing. It's not going to be good, but I can do that. I can live with that. But it's just a way to showcase my skills, and publicly, show that if I can do it, if I can't, how long does it take? But ultimately, yeah, we upped the stakes 10 to 25K, so about 150% return to get the target. And the way I did it was with the exact same ways and the methods that I teach. I talk about whether it's trading stocks or options. I trade both, but it's not that. That's not a secret or a key. How I
Mm.
trade them is the key. Now, one thing I always say, people say, Riz, I want to follow your trades for that. I say, look, I've been doing this for over 13 years. This is my entire life. Um, Following me or just copying me or mimicking me, because everyone wants 150% gain, whether it's from 5K to 15K or 10K to 25K or 100K to whatever. It ultimately, everyone wants those gains, but I always say, look, I'm doing it because I'm comfortable, I have the experience, I am able to utilize trading stocks and options in my way. And it's ultimately a blend of experience, risk. You have to understand that. And those watching, I mean, that I was taking significant amount of risk, and it was not a secret. I would say, look, don't follow these kinds of trades. I'm doing it to either go, showcase what I can do in a quick amount of time. But if it doesn't work out, I'm gonna probably lose the 10 grand, right? And I don't think people should trade that way. But it's to me, it's a mix of showcasing the way I trade, what I can do, but also a lesson for people that if you really, really, really want to grow an account, you can do it sustainably. But if you really want to up the ante, you're going to have to take a significant amount of risk. And that's what I was doing. And I always said, don't try and mimic me, whether I'm trading like that or in any way. Never, ever just copy or mimic. Do your own due diligence. Learn how to trade. Learn how the correct mindset and psychology around it.
Interesting. So there's a bunch of things that I'd like to try to dissect in here. First, let's start off with that 10 grand. So that is that a sum that like I so obviously you're okay with having like if things didn't work out.
Yep.
So what would be a point like if it's just like, yeah, you know what, like I would not try this 10K challenge with a 100K account or half a million account, like, well,
Yeah,
what's
that's a
the
great
that
question. That's a great question, because someone actually asked me there after I finished the challenge. They're like, Riz, that's amazing. Now, it won't take you time to do 100 to 250, 100 grand to 250. I said, whoa, yeah, I know the percentage is the same and whatnot, but the cognitive process, the mental process behind it is different now, because although I can lose 100K, I don't want to lose 100K, but I can, but doesn't mean I'm going to take the same risk as I did with 10K. This is a human nature where we always talk about percentages are important. They're pretty much the ultimate in terms of trading performance. But after a certain point, nominal values do matter, right? For example, why do I keep my account to, 7 figures and I don't just keep taking it higher and higher? Because after a certain point, the position size is going to, from what I take about on average about $100,000 position size on a stock trade. If I have like a $10 million account, in order to keep that kind of position sizing, similar percentages, it's going to have to be a mil or so, or half a mil per position. Do I want to do that? Am I okay doing that? I don't see the reason. I don't see the need to, especially, the stage I'm at. So then I don't keep it at that account value. I keep it around the 2 or so and that's kind of my sweet spot. So the point I'm trying to make is that you're right. If I did it with 10 to 25K challenge, I don't think I'd be able to do it from, 100K to 200K or 100K to 250K. I don't be able to do it. And that's my kind of stomach for it. Some people might be, I don't know, they're large billionaire hedge fund managers. They're like, yeah, we're taking $1 billion position. And if it goes up 100 million to 200 million or down 100 million, that's fine, because that's the hedge fund. That's the different nominal difference, right? So percentages are one thing. And you know what? You brought up a good question that I got. And I even said it, look, very different to do 10 to 25. It's a different ball game doing 100 to 250 or 1 million to 2.5 mil.
Interesting. So, I was just trying to run the numbers in my head. Like, well, what's that percentage in relation to your full account? I think that it's about like a 0.5%.
Yep.
Right.
Yep. On average.
So it's like roughly 2 mil in that
On
account.
average
So
for my swing
starting at
positions.
10K is.
Yep, about 10%. Again, I have some flexibility. I'm purely discretionary. So I have some flexibility around, do I scale in? Do I start with half a position, which I sometimes do in choppy markets like now, or uncertain markets, especially when there's a rotation out of a certain sector, right? Like rotation out of tech, or anything that I feel is not giving me too much confidence or is not conducive to my style, then I will take off the position sizing. But you're right, about 10% for my swing trading / investment larger account.
So then for somebody that's like, yeah, like I want to try to do this myself. So they would need to then, like part of the mindset would be scaling it down to the current position size. Like, well, a problem that I see a lot of new traders, and this is a problem that I had myself too when I first started out 20 something years ago, was like taking the whole thing that I had and then trying to trade with that versus like if you're going to be that kind of a to be super aggressive and you're new, to try to scale it down to a portion where you're not going to be in a position where you would blow yourself up. Or if you're going to trade ultra aggressively, to not do it with your entire account, but to do it with a small fraction, where if you blow up this small fraction, well, you still have 20 more of those fractions.
Yep. You're right. Position sizing is key. Diversifying is key. I'm not a day trader. So for me, I have multiple positions open over a span of, could be for a few days, could be a few months even. So I am okay with having that 10%. I'm diversified. I have a position size that I'm okay. If I have 100 grand, or there's, I've publicly shown pictures and videos of positions that I have open even now that are about 200K each. So that's on the higher end spectrum, right? For that portfolio, but I still do it because I'm okay with it. Obviously for someone else, they're thinking, oh, that's, 10% of your account value, but that's still 200K to someone. They're not going to be able to sleep at night if it goes up or down 1%, right? Because that's a big percentage is small, but the nominal value matters. So it's just finding what you're comfortable with, right? It's this balance. And that's something I can't tell someone what to do. I can't say 10% is the for me, it's like the right amount. And I've generally found that, for people who have a 10K account or a 100K account, whatever it is, usually 10% per position for a full position size on swing trading is the sweet spot. Again, everyone has that kind of wiggle room. Maybe they find that's too much exposure. Maybe they find that's not enough. They rather have a more concentrated account or portfolio. So it's all about tweaking and finding what works best for you. I know I have over the last 13 years, and it wasn't like that in the beginning.
So trial and error in the beginning.
Yep.
And it kind of sounds like trial and error, like as we go, as we evolve. Like it's still like we're
Trial and error,
never kind of at the
and
end, right?
we know ourselves best. You know yourself best. How you approach drawdowns, how you approach volatility, how you approach a certain market, environment. So what you have to do is be in sync with yourself. You'd have to be in, really in tune with how you're feeling, how you're performing, right? And that's not something anyone can do for you. That's not something anyone can just tell you to do step by step and then it will happen. No, you have to do it and you have to tweak, you have to adjust, right? It's like when you're driving a car and someone comes in your lane without signaling or whatever, you got to adjust, right? Your goal was to stay in this lane and go to the stop sign or get to your destination. But no, you got to adjust because things happen. So same way, if we're going to be rigid, and completely process driven, which is good, but we're not algorithms. We're not machines. And as much as that is good in certain ways, being mechanical, being emotionless, but we have things that machines and algorithms don't have. We have the ability to adjust, adapt on the fly. And I know machine learning is there and all that, but there's no machine out there that is even close right now in the scale and ability that what human beings can do with this. So you know what? We have to learn how to use it.
Dude, you just hit the nail on the head. It actually like if there were like a dozen nails, like you'd be like hammering all of them as we go, like
Yeah,
that.
I brought my hammer this into this to this webinar.
I love it.
Yeah, but seriously, this is a point that I try to hammer home to traders as well, is that you can model success, but you don't try to be a clone. Like cloning doesn't work. Like you need to customize.
Yep.
So I'd love to hear how you go about teaching or telling people to model success, or to like the person that wants to try to follow your trades, like how should they go about learning your process?
Yep. So two ways. First and foremost, people need to have the groundwork. You need to have the foundation. If someone's going to try and trade, and kind of adopt my style, not copy me or just follow me like a bot, but try and understand and adapt and do it the way that I do it, which for me and for many, many, many others has an edge in the market. If someone wants to do that, they cannot do that until they have the basics down. They need to have the foundation. And if someone can have the best intentions, they can have, the best everything. But if they don't have the groundwork, they don't know how to place a limit order, they don't know how to respect, risk management, then no matter who they try and follow or learn from, it could be Warren Buffett, it could be me, it could be, Ray Dalio, it could be anyone, and it's not going to work. So I always say learn first. And of course, I have my methods, the way I approach and perceive markets. And I teach them in my course. Again, it's not meant to be, take this course and you're going to go from 1,000 to 1 million. No, I never say that. I never promise that, or even, I would say assume that for the people. But what I do say is learn the foundations, have the knowledge and the platform to kind of step from. And the second part comes is getting access to me, whether, what I'm doing, what I'm trading. I always say I'm trading this, I'm buying this, I transparently say I'm buying this at this price. And then even when I exit, I let people know whether I made money or not. So if I lose money, I say I lost money. I lost money. I say I sold for a profit, or I sold for a loss, or I'm closing it at break even. So for me, it's all about complete transparency, not because I don't have anything to prove anymore, but because it's the right way to do things. I feel it's the only way to do things, because as someone who is talking about markets, who's providing people, information and knowledge and guidance. It's like being, Michael Jordan and saying you're one of the greatest NBA players to ever live, but you don't have any rings. You know, there's nothing to show for it, right? So that's why I feel like in this area, in this field, there's a lot of talk, especially over the last couple of years. We're kids, we're 15, 20, whatever. It doesn't mean if you're younger that you don't have the skill. It just means that people with not much experience, they're new, are telling others what to do, and to me, that's dangerous. That's dangerous without a proven track record, without transparency and anything to show for it. I have nice things, but if someone's going to follow me because I have nice things, then that's not the right approach. And I always say, if I have a McLaren in the garage, that's not mean I'm going to have a better hit ratio or be a better trader than someone else. No, that's just a result, right? So people go about the wrong way. They see the nice cars or this guru or whoever, sit in front of a car, like, on vacation somewhere, showing their wrist with a Rolex or whatever. I just find that so absurd, and people fall for it. It sucks. People still fall for it. I mean, you probably know, Mike, that I do my best to publicly call out. I know it's not for everyone, but publicly call out people that I find and I know are frauds, liars, and pretty much duping people. To me, that's a stand that every individual needs to take, because if you're complicit, you're literally allowing it to happen. So for me, that's unacceptable. So again, off a bit of a tangent, but for me, I find that people getting access to me, just being, whether it's in the elite membership or learning from me, just give it a little bit of time. And then people are just going to realize, wow, this is what we needed, and same with you, what you're doing, people can just get access and just give it a shot. If people give it a good shot, it's not going to be for everyone. And that's with life, there's going to be a certain subset of percentage that's not for them. But if people give it a shot and they give it a good, like, genuine try, it's going to be amazing in terms of what's achievable.
Riz, I'm just going to jump in here because as a beginner trader, I think a lot of people who are viewing today maybe want to know, like, how do you know who to trust? There's so much information out there, so many great guys like you and Michael, what you're doing, but how do you tell the fake gurus from the people who actually want to help?
Yeah, Melissa, that's a great question. And it comes down to being genuine. How are you going to know someone is genuine? You're not. How is someone going to know I'm genuine? They're not initially. You have to follow along and see, and kind of essentially actions and what people do will tell. So I always say, if someone's trying to promote, number one, if someone's trying to promote some kind of lifestyle, I always promote trading as something that's a kind of a skill set that you should enjoy just because you're getting better at it. That's the reward. The money and all the other stuff is potential and theoretical. You will know that someone is not really who they are is if they're doing it the opposite. They're showing you the result, even though most likely they have no result. Majority of these people do not even trade. In fact, I personally have busted many paper trading and pretending like, oh, I just made 200 grand or 100 grand off of this position. And then, it's actually paper money. So, it's ridiculous. But finding out who is real takes time. Right. I have no doubt that if someone followed me, it would take some time, and that's fair. Take some time to really see how someone is approaching markets, what information they share. Is it genuine? Are they promoting a lifestyle? Are they transparent? And are they transparent not in terms of you have a screenshot of a statement and then you just crop this thing and then you just show the P&L? Like, to me, I get it, okay, to a certain extent, but that's not full transparency. That's anyone can do it. So what transparency is, consistent transparency, not just showing one image, but showing videos. I scroll through my brokerage and show, dividends coming in. And in that, if someone's savvy, it shows how many shares I own of a stock, right? And it doesn't take long for someone to know the current price and how many shares I hold. Position is 200K or 100K, and they can see how much dividend I gain on that. This is showing that it's not just about the account balance. Someone can have an account balance, but have halved it the last year. They could have lost 50%, but still have, 100K. That doesn't mean anything necessarily. You have to show the positions, you have to show the P&L, but transactions. And for me, because I hold, for swing trading along with some investments, I can show dividends. Not everyone can, because I know not everyone is holding, dividend-based companies. But for me, I can, and I show it, for better or worse.
Great,
Yeah,
thank you.
another thing too is the person giving value? right? Like, are you getting value from following this person? Are you learning something?
Yep.
Or to your point, like, are you just seeing a fancy car in a driveway, or that, like,
My problem, and I agree, Mike, my only issue with that and that alone is there's been plenty of people that tell me, Riz, I learned something from this XYZ person. I'm not on here to call anyone out, but if they give me, I learned from XYZ person, and I already know that, okay, that's good that they learned something, because you know what? Even Google will teach you some things, right? There's Googling. But the problem comes is because someone is new, they learn something, but guess what? If they go below the surface, there's nothing there, right? So it's easier to say, okay, well, this is what a PE ratio is, and then define it, and someone will learn
mm,
something. Or it's easy to say, this is what a bullish candle looks like or a bearish candle looks like, and someone will learn something, and that's great. But this is from fraudulent accounts. This is from people who don't really trade, or they're lying and they're scamming. They still show some good stuff, but the surface level, anything below that is not there, right? So
mm,
I always caution people: you can learn things. You can learn things from a mob boss, but doesn't necessarily make it the right person to learn from, right? I always say it's, if you're going to judge someone at surface level, get ready to get what you put into it. And if you're just going to buy something from someone who doesn't provide transparency, has no track record, get ready to get something equivalent to that. Because I have not to this day, um, found someone who's uh, very, very, very successful, but only flashes around their Rolex or something. Most successful people don't really care. I don't care what I drive. I drive what I drive because I enjoy it. I don't care, you know, they're not frivolous. They're not flashy. You know why? Because they have enough to not try and prove anything. It's a different thing. Someone likes watches, someone likes jewelry, someone likes nice houses, nice cars. Great. If you can afford it, do it the right way. Great. But remember, people are not following along as to what the intention is. The intention of the guru or the person who just wants to make money so that they can live an extravagant lifestyle is that car or that item. When for a majority of us, like you, me, Melissa, others, who want to trade and get better and succeed and just learn and be competent and get better at a skill set, a high functioning, a very unique skill set, the reward is getting better, not a car. And yeah, I get it, it's okay to spend the money on things you want when you do get there, but that should not be the goal per se. I always say, and I always say things that are counterintuitive to people. I always say, don't just sit there in front of a screen and day trade. I know there's people that day trade, but I've never found a single day trader who is willing to share a track record with me, or really prove who they are. There may be one or two, but even that I'm kind of a bit sketchy on. I found the majority of people that are succeeding are behind the scenes, and they operate in markets in different ways. They're not just the cliche day trader trading morning gaps. Like, it just blew my mind. It's fine, it's okay, but it's not. That edge is decreased over the years. With scanners everywhere, with being able to know what's moving pre-market, whether you're on your phone or whether you're on your 10 screens. The game has moved on, and I have not found anyone have a sustainable edge, who's selling services, and they're a day trader.
interesting. Interesting. We could go even deeper into this, but I'd like to change gears to the current market conditions. Right. The current market has been all over the place really since I'd say February. It started to get choppy. Uh, how have you changed your approach, or have you changed your approach? How have you adapted, and what strategies are you using now?
Yep. So, one of the ways my members and students know I've done is I've in that environment. So you're right. February onwards to even now, what changed? We saw bond yields change. We saw potential inflation fears. We saw stimulus bill, and we saw a lot of things that are affecting monetary policy, and of course that impacts markets to an extent, and of course the economy as an underpinning. But how do I respond to that? You have to respond to it in terms of what works for you. For me, what works is I cut position sizing. I
Mm-hmm.
trade less. I have become more selective with what I'm seeing. If I see a good setup or I see like a good opportunity because something is, at a 200-day moving average or whatever my entry parameters are. If I see a setup, I'm going to be even more cautious in entering. And if I do really, really feel like this is it, this is a good setup, this meets my criteria, I might take a half position. I might take a starter position. So I've adapted these kind of ways, and they're not set in stone. As market conditions move. So, as things stabilize, then I can increase the risk or take a little bit more trades than I would. Again, not over trading, but taking a little bit more trades than, when things are, puking. And at that point, I always say when markets are bleeding or there's massive uncertainty, just not losing money is a win itself. Okay. And it sounds easy, but it's not, because I know everyone makes it look easy online and on social media, but it's not,
it's the hardest thing. Like to do this,
that's
right? Sit on your hands.
dirty.
That's tough.
So hard. It's so hard. A lot of my time goes into not teaching people about like moving averages and breakouts or this or PE ratios. It actually goes into the psychology of it and the ability for people to just wait and be patient. You don't need to just sit there in front of the computer and look at charts and lines all day. I've said it many times, I'll say it again. Human beings were not made to look at a screen for 8+ hours a day, and specifically as traders looking at lines and prices move ding, 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 nonstop. We weren't made for that. At some point, I assure everyone who's listening and watching, even afterwards, that at some point you're going to see things that are not there. Not because you're crazy, but because you're going to see setups, you're going to see trades that you've conjured up because you're looking at it so much. If you look into, Mike, you have a beautiful orange wall behind you. If you were put your nose up to that wall and you looked at it flat to center for enough time, your eyes are going to start seeing like swirls and stuff. What does that mean? Not because you're making stuff up or you're seeing things, because your eyes are just, your mind, your brain is acclimatizing. And when you keep on looking at the same thing again and again, nonstop for hours on end, you're going to do things you don't need to. And to me, trading is about efficiency. It's not about hours. It's not about time only. That matters, but it's not the only thing. I find, and this is the only profession in the world, I think, unless I'm wrong, where if you do less, sometimes you can, come out ahead just by doing less. When someone's at their job, okay, because we've been conditioned to do this since a very early age, where when you go to work or when you're doing a job or even running a business, you want to do more and more and more and more. Trading can be opposite. And for me, in my anecdotal evidence, experience and my own experience and experience of my students and members, sometimes doing less is more. And it's hard to believe, but honestly, if people stick with it and they really, really can bring themselves back to not over trading and being in the moment, it's a game changer. It's a game changer than any kind of algorithm or breakout pattern or upside down bat pattern could ever provide.
I couldn't agree more. And there's like a dozen sound bites in what you just said. I can't wait to go through the highlights and pick that out.
Yeah.
One of the tactics that we spoke about when you were on the show last time, which I've adopted, it's like a special tool in my toolbox that I'll pull out every so often in markets like this, is selling puts on ideas that I wouldn't mind owning if it actually dropped to that price.
Yep.
Can you walk us through that strategy and
Yes.
tell us if you are using that strategy presently?
Absolutely. I'm happy you brought that up. I didn't know you were going to bring that up, but I'm very happy you did, because you're absolutely right. Many people in this day and age, especially with Wall Street bets and social media and everyone showing like 500,000-600,000% gains, the biggest edge someone can have today when utilizing options, if they have the ability to and the knowledge and skill set, is actually shorting or selling, aka writing options. Like you said, I mentioned it last time on your channel, in our live, or it was a Zoom call, whatever it was, and I still do it, and I call it the Raptor method. I teach this.
Raptor Method.
Yes, the Raptor. Someone
Why
asked
the
me,
Raptor Method?
what's
How'd you come up with
I
that?
love that
yeah,
name.
for me? They're like, yeah, what's with the names? What's with your names? Why do you call it this? For
Like,
me,
it's a
there's
cool
nothing.
name, but
Yeah, it's a
The
cool name, but why?
dinosaur like coming out.
So what people don't know is from me, from a very young age, I wanted to be a fighter pilot. I couldn't unfortunately get in simply, even if I tried, just due to health problems, they just won't. So for me, that was a write-off from a very young age. And one of my favorite aircrafts, for those of you that are, that are watching that like aircrafts and fighter jets and whatnot, is the F-22 Raptor. Okay, it's one of the finest aircrafts ever made. It still is. It's a fighter jet, really, and it's one of the best. And to me, I don't know. I just love it. I love that airplane. And for me, I felt, what's a great name for this strategy? Obviously, there's more to the strategy than just shorting puts. Like you said, it's like I literally have a flow chart on if A happens, then do B. If B happens, then you go to C. If none of these occur, start again from A. So I have a whole full flow chart for people that learn, but it's called the Raptor Method. And in a nutshell, you short out of the money puts on stocks that you're willing to take delivery of, right? One contract for every 100 shares could be Apple. For example, Apple is one I did recently. There's some that I in fact did today, this morning. So it's funny you mentioned that. And let's say stick with the Apple example. If I like Apple at 120, I'm going to short 120 put option. I'm not buying it. I'm going to short it, and the strike price could be maybe 5%, 10, 15% from where it is right now. Give it some room. Or at a strike price, I'm completely okay taking. So I'm getting paid. Effectively, Mike, I'm going to use the same analogy I used last time. It is like getting paid to do a limit buy order, right, at that strike and at the expiry. I usually do expiries of 1 to 2 weeks out for the Raptor method, but again, that's up to the individual. And Apple, for example, if Apple hits 120, great, I'll take delivery of that. And maybe it goes lower, but that's fine. I got paid to take delivery of what I already wanted anyways. And now my cost is 120, not including the premium collected. Then I'll move on to the next, which is shorting calls at the strike price that I want to get rid of it at. So now that's like getting paid to do a limit sell order, right? You're getting paid to do a limit sell order for the time frame that you want, whether it's a week, 2 weeks out, or whatever. And to me, it is one of the biggest edges in the market if done right, if done with the proper risk management and account size. To me, bar none, doing this has been like supercharging my account over the last few years. And hands down, trading stocks selectively the way I do, and then using the Raptor method and certain other methods I talk about. Some are a little bit more risky, some are less risky. I go into all that, but doing those, in my view, I can look anyone in the eye and say, this is the number one edge I've ever found in my life of 13 years in the markets.
That's super interesting. You had mentioned for the right account size. What would you say is the right account size?
Yeah, so there's, again, like just like everything in trading, there's no set in stone. But I usually say for someone who wants to do the Raptor method, or like shorting puts and then rotating out with covered calls, I would usually say having over 20, 25K. Again, when you're doing short puts, you need to also have a margin account, right? Because you're shorting a contract, it's going to take some margin, it's going to take some buying power when you do that short put, and you have to have the ability to take delivery. I always say, if you're going to do a short put, ask yourself, are you okay taking delivery? If you're going to take delivery of Apple at 120, that's $12,000 right there, right? If your account is $15,000, you can imagine the over concentrated position someone would have in Apple if it goes in the money, even though the percentage is very less chances. The way I do it, the chance of getting in the money is less, but it can happen. We need to have a contingency there. Do you have the ability? And, taking a $12,000 position, delivery of a $12,000 position on Apple on a $15,000 account, that is your entire account is Apple at that point. So Apple better do great, or you're going to be in the corner, crying at some point. So I always say, you can have the account. Someone can have a $15,000 account, but if they have to do it selectively, if it's a $5,000 notional value. So meaning if a stock is $50 and they get assigned, that's $5,000, and they have a $15,000 account. Okay, that's concentrated about 33% if they have to take delivery. That's why I always say, the more capital someone has, the more opportunities. People find that once they break past a certain account, account value ceiling, the world opens up to them. Now they can do multiple short puts. If I showed you my brokerage account, Mike, I'd have to scroll for minutes because of the amount of short puts that I have sitting there. Okay. Obviously my stock positions are there. My option long, I have some long options, but you would see like a plethora of short puts sitting there. I have the equity, I have the buying power. Now I'm getting I'm getting paid to wait and potentially take delivery if it gets there. If it doesn't, yeah, maybe I missed some upside, but I got paid. I got paid to wait. And when you have a large enough account size, when you have the ability, like it's not a secret, I make like about 10 grand a month conservatively, very conservatively doing option rights. Very conservatively. You know, it just depends, of course, on the scalability and the account size. Could I do more? Absolutely, but I rather be, err on the side of caution, and that's not including what I make in capital gains. That's not including what I make in dividends, right? It's just 10 grand, right? And I'm doing it very, 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 like very conservative. If I have to up the risk, I could do maybe 20 grand a month, but I don't need to chase those kind of numbers, right?
Yeah, managing risk is something that's super important. I'd like to talk about that a little bit too, but I want to also open up the Q&A to the audience as well. You guys have been sitting here listening, hopefully taking a lot of notes and absorbing all the great pearls of wisdom that Riz is giving us. But it's your time too. Put your questions into the chat. Melissa's moderating the Q&A. Get them in, and Melissa will start firing away the questions.
Yep.
So while we're waiting for some of the questions to roll in, can you tell us a little bit about risk management? We spoke about it from a position sizing perspective. How about from like market conditions and technical analysis? Like, well, what kinds of things are you looking for? Well, what's on your radar?
Yeah. So the most basic and I think simplistic and I think still effective approach is when you enter a stock position. Again, I'm going to stick with stocks. Um, if you buy something, if you go long something, ask yourself, okay, where's the support? Support is important level. Regardless of people's attunity, whether they like technical analysis or not. Support is a level that we should know. And same with resistance levels. We need to know that and see where is that level. And if that level is potentially far out of the stop loss constraint, meaning if you buy Apple at 120 and the next support is $100 per share, that's $20 per share drop, right? That's 20% loss on the trade. In order to, break even on that trade at that point, if it goes to 100, you're going to need to probably have like another probably 30, percent or so on increase in the stock to get back to break even. And at that point, you have to ask yourself, if I lose $20 per share on this, that's 20% of the trade. What is that as per my account size? Hopefully for I would say an account that's, maybe 10, 20, 25K. What if it's less than 2%? I usually say less than 2%. You don't want to lose more than 2%. If someone has like $1,000, they have to up the risk. I mean, it's a smaller account. I usually say if they want to grow the account, they have to up the risk. Maybe move that max line in the sand, stop for getting out of a trade, maybe 5% of account value. Okay, they have to up the risk. But if they have, $100,000 account, there's no reason they should be needing to lose more than 2% or something like that per trade, per position. And that's going to depending on how large their position size is. And of course, where if they go long, where's support? Where's support? Is it within the criteria, right? These things matter. Ideally, like another risk parameter, I would say risk management or profit taking parameter to follow is, a 1-for-2 risk reward. So if someone's willing to lose $1, at least they should be willing to make $2 on the trade. And I know people say, have a 3-to-1 risk reward or 4-to-1 risk reward, but unless you're trading penny stocks or these crazy meme stocks, where are you going to get a 4-to-1 risk reward? Ideally, it's not real world, right? It looks good on paper, right? It looks good on paper, but it's very, very rare to see that happening. So I always say at least aim for a 1-for-2 risk reward ratio. And then you combine some of these things and, someone's looking in good shape to protect their account and hopefully grow the account as well.
Interesting.
Okay,
I think I saw
great.
some
I have a
questions come in.
question from David. He asks, with your success in the stock market, do you have any interest in taking your strategies to the crypto world? Are you comfortable where you are, that meaning that you don't need to overextend yourself?
Yep, great question, David. So in fact, the way I approach markets in terms of the stock market and what I teach and the indicator that I give, the Riz Alpha Cross Evo indicator that I give access to my students, that indicator actually works amazing on crypto as well. So fun fact, I used to trade crypto very heavily back in 2017. I just, I got tired of it. It was the Wild West, still is kind of, and I just closed all my positions in the end of 2017 when BTC hit around 19 to $20,000 US, and then I closed everything and haven't gotten back in per se. But it does work. It does work what I teach in terms of technical analysis, and my indicator does work on crypto as well. Do I trade crypto right now? I don't. Do I monitor it? Yes. Do I have a holding in anything significant? No. But that's just me. But to answer your question, mostly because time constraint. Of course, I'm already juggling so much. I already have stocks and options and my businesses and my members. So doing something like crypto, which is 24/7, would probably me being in my office and sleeping in here, eating in here. So I think for my sanity, it's best I don't trade crypto for now at least.
Okay, great. And Jesse has some questions about the type of services you offer with your company. He wants to know, do you teach trading? Do you trade other people's accounts? Just to give a little bit more background about it.
Great question. So for me, I have, pretty much what we've discussed here, three different things that I think are pertinent to what we discussed. One is the stock trading masterclass. It's like 15 hours. That just, get into it, taught everything by me video, and people get lifetime access to that. They get to learn how I trade, how I approach markets, technicals and fundamentals, right? Of course, people get access to my proprietary indicator as well. And then there's the options masterclass, which is, of course, what I would kind of highlighted slightly, which is the Raptor method and how to trade options. And then last but not least is the membership, Mike, similar name to yours, the elite membership, whereas people get access to me, what I'm trading, chat room, and all that kind of stuff. And really, these three things, if people focus on, I think it's more than enough. And in terms of account management, I don't manage other people's money for regulatory reasons, for compliance and all that, right? I'm in Canada, and actually we have a little bit more stricter laws in terms of managing outside capital than the US. And again, that's a complex topic, but ultimately, yeah, I don't manage other people like money that, if they're on the internet or I met on social media or anything like that.
Okay, great. And I just had a quick question. So I'm going to take you back to your 16-year-old self, just starting out trading. What was one of the biggest challenges you faced starting out so young and learning about trading?
Yes. So by far, the biggest challenge for me was not something that, it wasn't a lack of motivation, it wasn't a lack of interest. It was actually the tools, the ability to get the knowledge. So me being 16, again, I'm old now, was 2008.
Old.
I know. I'm like laughing. I'm like, what?
No, but trust me, I mean, I say it jokingly, but also semi-truthfully that, I mean, for me, what I've been through, again, no complaints. I'm very fortunate, very blessed, but it's been a time, man. I mean, without going into details and just essentially being a bummer, it's been quite the ride. Let's just say that. And that's why I feel old. You go through certain things in life that age you and as long as they don't break you, but they do take their toll. So that's why I say I feel old. But ultimately, being 16, for me, it was just a matter of not having the tools. I didn't have a mentor per se. The original iPhone had just released around that time. So to give you an idea, I was going to college. I was starting up college the next year. So that was 2009 and whatnot. For me to grow my knowledge, I had to go to the library because I didn't have a smartphone. I had to go in library, sometimes skipping class, and search on Yahoo Finance, Google certain terms. I would have to go to the local library to find any trading books that I could, and they were far and few between. But really getting as much knowledge as I can, fragmented. There was nothing like we have now. The access, the webinars, the mentors, the courses, the real time data. Like I didn't even have real time data for like the first 3 to 4 years of trading. I was like 15, 20-minute price delay every time. Like, and yeah, I wasn't day trading, but still, like, it's absurd to think that now. Right now, it's like you get free data, you get no commissions, you get everything at your fingertips. I had to be on the computer to even know what price, Microsoft or Apple was back then.
Yeah, the advantages that we have today are substantial, and it really does make trading accessible to anybody. It's uh, educating yourself,
Yep.
finding good mentors, well, like yourself, that are willing to share everything that you've learned and have been transparent. You know,
Yeah.
like
In fact, we live in an age of disinformation now. Now we have so much information that a lot of it is noise. A lot of it is frankly garbage. So sure, things have gotten so much easier in terms of people accessibility. The barrier to entry is so much lower. Imagine having to place a trade and it costs $50. You couldn't do that with $1,000 account. You do a round trip and you're out, you're out $100, 10% of your account, just probably one round trip trade. So you couldn't do that. Now people can start with almost anything because the costs are so low, the accessibility is so high. But the problem comes because it's so accessible, people think they can just get in there and walk in there and trade with some of the brightest minds, trade alongside me or against me. Because this is really the fact. The market is a zero-sum game. I know people don't like to hear it, but I always say it in a very unbashful, way and in a very blunt way. I say, if someone's going to go in the market with whatever money they have, they don't have the training, they don't have the guidance, they don't have the experience, and they think they're going to make money. They can. Beginner luck is the thing. Short-term trading, short-term gains is great, but the longer you do something, probabilities and statistics will catch up, and that's where people like me come in to take your money. Right. And this is a sad fact for people watching. If you do not put the time, money, energy, and the commitment to learn from whether it's Mike, me, or anyone else who's vetted, it's gonna be a hard time, man. It's gonna be a hard time.
Yeah, well, like I often think of it this way too, right? Like there should be some kind of a test to open up an account, right? Like something that like you can't just walk into a hospital with a knife in your hand and say, "Okay, I'm here to do surgery." It
Exactly.
doesn't work that way.
Exactly.
But you could still open up an account and trade your life savings. You
Yep.
can't just walk into a courtroom and start defending
No, you
plaintiffs
can't.
or defending defendants, right?
Yeah.
Like,
You bring a great point, and I use a similar analogy. I say, if you wanted to go skydiving for the first time, would you jump out of the plane without knowing where the parachute latches? And better yet, where the secondary parachute latches, because there is a secondary parachute. It's suicide. It's suicide. Why would someone do that? Why would someone do that? They wouldn't, right? That's why when you do your first dive, you have to have an instructor, and only then do you graduate to being able to do solo, right? But same way with trading. Why would someone go into this killer marketplace in this day and age with hedge funds and bright traders and algorithms and fast-paced markets and experienced people with massive amounts of money and tools that you know people can just get obliterated, and that's the dangers of everything. There's always two sides to a coin, um, whether it's with car, with a house. You want to get from point A to point B. Great, the car is great, but there's risk with that. If you fall asleep at the wheel, or if you're distracted, or worse, someone else is distracted or at the wheel or drinking and driving, there's risks. Same way with trading. The positive upside is there. And I always say one quote, leave you with, the ability to make money in the markets is extraordinary, but don't be fooled into thinking that the ability to lose money isn't there, because there is. And that is a pendulum that people need to decide which side they're going to, which side it's going to swing. And it's up to them to align themselves in the right direction.
very well said, man. Thank you so much. I really appreciate that. Uh, Unless if there's any other questions, we'll wrap things up. Melissa, was there anything else in the
Oh,
chat?
no, that's it. Just what's the best way for people to reach you, Riz?
Yeah, great question. So for me, people can reach me on Instagram, Riz International. People can reach me at rizinternational.com. Really, any way you can email me, info@rizinternational.com. So really plenty of channels. YouTube, Twitter handle is Riz Memon Traits. Okay, RIZMEMON Traits. Okay, that's my Twitter handle. You can find me. I'm sure Mike or can probably link it to you as well. But yeah, I'm on many social platforms, always open to talk, helping people. I know sometimes it can be a bit intimidating, but I assure people that I answer every question, unless it's like someone trolling or it's just ridiculous. But I do answer every single question. It might take some time because I get so many, but I do answer every single question.
That's awesome, man. Riz, I really appreciate you giving us the time, coming on here, chatting with you again. I always learn something every time that we chat,
Thank you.
and not just learn something, but learn something that's actionable, that I can put into practice right away.
Yeah.
And I appreciate you. Thank
Thank
you
you
so
so
much
much.
for being
Thank you,
here.
Mike. Thank you, Mike. Thank you,
Thank
Melissa.
you,
It's been a
Riz. Thank you
pleasure.
so much
Thanks,
for being
everyone.
with us today.
Thank you. Thanks everyone for watching. All the best. Enjoy the summer or whatever kind of weather that you're getting, and be safe. And you know what? Do the best you can with every day that we have. It's the most we can do.
Absolutely.
Take care. Ciao.
Right.
Thank
Take care,
you.
Riz.
Bye.
Bye. Bye, everybody. Riz is the man, isn't
He
he?
is so awesome. Oh my god, we've got so many great highlights. I couldn't stop writing. I'm like, this is so amazing. Just like from starting at 16 to where he is today. It's what an incredible story.
Yeah, such an old man at the ripe old age of what is he now? 29, gonna be
Oh
30.
my
Jeez.
god, I was laughing, but yeah, so glad he was able to be with us on our show. What's one of the highlights you got out of it?
Yeah. So many. The first one has to do with your risk management, but your risk tolerance, and to figuring out what your personal sweet spot is, and going through that process because it's going to be a little bit different for everybody. So to do it and to not be afraid to test and try and to continuously evolve.
I love that. And I think that also it comes back to the point that he had made about you need to take that time, money, and commitment to learn. I think so many people go into this, they just like dive right in. Similar to that skydiving analogy, would you just jump out of an airplane without knowing where the parachute is located?
Yeah, you
No,
jumped
that's
out of an
crazy.
airplane. Did you know?
I did, and I had the instructor, and I was still freaking out. But yeah, no, you need to make sure you do that. You take that due diligence to learn. Like just with anything in life, you need to take that time, or else yeah, you will learn the hard way. So it'll help you keep in the game longer by learning from good people like Riz, to make sure that you're learning from good mentors.
Yeah, absolutely. Yeah, and I love the Raptor method. Like I was thinking about like the Raptor. Like I was
That's what
thinking
I was
like
envisioning.
Jurassic Park. But no, it's a great strategy and it works. I've used it and yeah, it works for it's it's an advanced strategy. Yeah, you do need some experience, some training to trade in that way, but it is a great strategy.
What was your favorite? Leave it in the comments below and can't wait to hear from you. And any other questions you have, feel free to reach out to us on marawealth.com. And don't forget to subscribe and give us a big thumbs up for more great interviews like the one we had today with Riz in the coming weeks.
Yes, now take everything that you've learned and run with it. We'll see you next time.
See you soon.
Take care,
Bye.
everybody.